the semis, I think the stocks was up 1.3% roughly. You had a pretty good day for Nvidia. I believe you're getting Micron results fairly
after the close.
After the close. How do you read that, Mike, in terms of one day we care and the next day we kind of don't? I mean, again, for the part of the market that for much of the year was the driving force.
Sure. I mostly read it as, and this sounds really deterministic, but the market has kind of decided that we're comfortable with these levels. You don't have aggressive selling at S&P 57 and change just yet. And so on a given day, if the macro cooperates, if we have to rely on the handful of semi-stocks that look like they're relatively oversold, you got this headline out of, not even a headline, just a story that Jensen Huang maybe is going to slow his sale plan.
Yeah.
Or stop it for now. That shouldn't really matter. It wasn't really a huge swing factor in terms of the value of the stock on offer for Nvidia. But nonetheless, it was a pretty good excuse for that to work. I think it's much more about, on a given day, it's either banks and small caps working or it's the Magnificent Seven. Banks and small caps working really relies on soft landing and Fed cutting rates. The rest of it just relies on the mood about, the long-term secular growth story.
Imagine waking up to find that one of the hottest stocks in the tech world, Nvidia, has just skyrocketed, making waves across the globe. It's the kind of news that gets anyone's attention, and it's happening right now. But before you dive headfirst into this stock, there's a whole story behind Nvidia's spectacular rise and the recent slip that might surprise you. Nvidia, renowned for its leading role in artificial intelligence technology, has had a wild ride this year. What does this mean for investors? Hold on to your hats as we unpack this thrilling journey. Welcome back, everyone, to Investocracy.
Interesting today is the markets again being held up by Nvidia and the related,
What do you mean today?
Scrappy
I don't know what day of the week it is, Mike, but I do know the market's been held up by Nvidia for about 2 years.
Here's what I'm going to tell you. Since the end of the second quarter, since June 30th, Nvidia's flat. The equal-weighted S&P is up 8%. So the rest of the market has come around to doing what everybody was calling for it to do, which is broaden out since then. Now, you do wonder if Nvidia now is getting a little bit of respite here. It's kind of churned around these same levels. It's around the mid-120s. This seems like, you see that chart right there, it could finally break this pattern of having, kind of lower peaks. We'll see. That, to me, is what the market is clinging to today to try and keep from a broader pullback, because most stocks are down today.
Speaking of AI, UBS is highlighting some major headwinds hitting active managers. According to the firm, large cap managers have 4.4% exposure to Nvidia, despite the chipmaker accounting for 6.6% of the S&P 500. In other words, that's the biggest underweight position ever in Nvidia, causing managers to underperform by about 130 basis points this year.
Nvidia, the titan of AI and graphics processing, has seen its stock value jump nearly 700% since 2023. Talk about a ride. But even roller coasters have their dips, and Nvidia's stock recently slipped 14% since peaking at $136 per share in June. This happened just after the company completed an eye-catching 10-for-1 stock split, a move that stirred up quite the buzz in investment circles. So what's behind this dip? It's a classic tale of expectations and reality. Investors are worried about whether AI spending can keep its momentum. They've been itching for proof that those hefty capital expenditures are actually translating into revenue growth and productivity. The evidence has been scant, stirring concerns about possible AI budget cuts. And if that wasn't enough, a sequential decline in Nvidia's gross margin last quarter hints at rising competitive pressure. Companies are designing custom AI chips, fueling fears Nvidia might lose its dominant position. Yet, Wall Street seems to have some good news brewing for longtime Nvidia followers. According to Jonathan Linden and Joe Seidel at JP Morgan, investments in AI infrastructure are not just holding steady, they're building momentum. They forecast that spending from major cloud giants, Microsoft, Amazon, Alphabet, Meta Platforms, and Oracle, will increase by 24% annually over the next 5 years, up from 15%. This surge is not just for show. It's expected to have a real impact on productivity by the end of the decade. Think of it this way. It took 15 years for the personal computer to enhance productivity. AI could do it in 7. It's no secret that the international data predicts AI will add a monumental $4.9 trillion to the global economy by 2030, jumping from $1.2 trillion today. In that scenario, AI would make up 3.5% of global GDP by the decade's end. That's a massive deal for any business with plans to stay competitive. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Back to the video.
Great to see you, Scott.
Since the Fed did their jumbo cut, the market really hasn't done all that much except for one day last Thursday. Why?
Well, I think the Fed unleashed us on an easing cycle, and that's going to be positive. We know it's actually historically positive 3 months, 6 months out. But what stocks do in the next month is a bit of a coin flip, and I think that's what we're seeing because there's some repositioning that took place. And also we're now thinking about the 40 days into the election.
So does the fact that the election is but 40 days away sort of ruin the perfect scenario for stocks to get that post-Fed bump?
I think it delays it, just because, in the conferences that I've been speaking at and seeing wealth managers and family offices, a lot don't want to commit capital until after Election Day. And I don't think it matters who wins. It's just they want to get that event behind them.
Oh, so you think we're going to have sort of a dash to the finish after Election Day is out of the way?
Yeah, and that's pretty typical. In fact, in election years, the November, December rallies are pretty tremendous. And in fact, when markets are up more than 10% in the first half, you also get big rallies November, December, sort of choppy through September.
Of course, not everyone is drinking the AI Kool-Aid. Skeptics compare it to the internet's early days, expecting AI to suffer a massive drawdown, just like early internet stocks in the 2000s. But experts like Beth Kindig at the IO Fund are optimistic, believing Nvidia could hit a mind-boggling $10 trillion market cap by 2030. Meanwhile, Morgan Stanley has added another feather to Nvidia's cap, stating that the competition consistently falls short. Nvidia accounted for an astounding 98% of data center GPU shipments last year, and its market share in AI chips exceeds 80%. Forrester Research even said, without Nvidia GPUs, modern AI wouldn't be possible. Competitors, ranging from Intel and AMD to tech behemoths like Alphabet, Amazon, and Apple, have tried to make waves with alternative GPUs or custom AI accelerators, but Nvidia's chips still offer the lowest total cost of ownership, as CEO Jensen Huang confidently asserts. Now, even though Nvidia might lose some market share as more custom AI accelerators come into play, it's crucial to note that losing some share is not synonymous with losing market leadership. Nvidia's cutting-edge hardware, complemented by a robust software ecosystem, gives it a mammoth competitive advantage that's hard to shake. Just ask Wall Street. Of the 64 analysts following Nvidia, a whopping 94% rate the stock a buy and the remaining 6% a hold. Nobody's saying sell. With a median price target of $150 per share, there's a projected 29% upside from its current $116 value. Analysts are banking on Nvidia's earnings to grow at 36% annually over the next 3 years. Current valuations at 54 times earnings might seem high, but they're justified when you consider the PEG ratio of 1.5, a considerable discount compared to the 3-year average. What's more, the tweets and social media buzz support these bullish sentiments. Investors and tech enthusiasts alike are watching Nvidia's every move, making it a hot topic of discussion, often likened to striking gold in the tech minefield. One tweet humorously pointed out, buying Nvidia now is like buying beachfront property in Manhattan in the early 1900s. Sure, it's pricey, but imagine the future value. Another tweet added, Nvidia's GPUs are to AI what Meryl Streep is to acting. Simply unbeatable. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
You think investors are sold on the idea that this economy is going to make it? It's going to make it through. The Fed's going to pull this off. Is any of what we've witnessed since Fed Day doubts about the bigger picture?
So far, so good. This Friday, we get core PCE, and hopefully that confirms inflation is no longer on the front burner. But I'd say one thing I've noticed is that the number of investors and professional money managers that think we're already in a recession is very high. And so I think the evidence just has to be better than expected, and I think those views shift back to soft landing.
When we've seen, recently targets for the S&P, Brian Belsky, I keep bringing him up because he's the most recent to raise his target up to the highest now on the street. I've asked you about, the market lately. You haven't sounded like you'd be raising your own target to a degree like that, would you?
I think there is a lot of upside in the foreseeable future. Let's say 3-6 months out. But for someone to tactically say we need to pin a 6,000 target and then put money to work today, I think it's harder to make that case because valuations aren't on the cheaper end, and we've already had a fairly sizable move. So I'm not saying I'm bearish right now, but to me, I'd have a lot more confidence saying 3-6 months out, things are attractive, especially things like margin debt, right? It actually decreased in August, meaning investors have been deleveraging. Mm-hmm. It hasn't gone anywhere for the last 4 months at a time when markets are rising.
So, should you invest in Nvidia? If the insights from Wall Street analysts and experts are anything to go by, the answer is a resounding yes. Despite recent dips, Nvidia stands strong, underpinned by substantial AI investments and unmatched quality in their GPU products. With a projected 29% upside and a robust growth forecast, Nvidia offers a promising investment avenue. Currently, Nvidia holds a dominant position, with its stock valued at $116 per share. The future looks bright with expected annual earnings growth of 36% over the next 3 years. All these factors make Nvidia an appealing choice for investors eager to capitalize on the AI revolution. What's your take on Nvidia's spectacular journey and its position in the market? Are you ready to ride this wave? Share your thoughts and join the conversation as we keep an eye on what could be the next big leap in technology investment. After all, in the ever-evolving stock market, staying informed is your best bet. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.